Good morning, 9:15 a.m. Pacific Standard Time. Date 6/1/2013. It is now exactly the midpoint of the year in directional price movement that we're going to be discussing with our MMTs in our market maker division, the ones that are using the market maker capital to take intraday price movements higher and lower. To define the price movement, each one of these movements are a half a delta in the MMT market maker platform, 58.86. Referred to as the MMT market maker platform, the delta price beta that we have mathematically tracks the overall algorithmic buy and sell systems that are in markets today that were never in markets in the last 10 years. They just started at that point, but anything in those calendar dates. So when you were in your, mid 90s and you were going through markets and bull rallies in 1982 that started, all the things that were happening is that we've changed now. And what had happened was we made the highs in year 2000 of that 12 and a half year bear. The difference between the buy and sell scripts, they're called bear scripts and bull scripts, or bull scripts and bear scripts. And what are they? They're directional price movements that are defined at either major tops and or where price weakness will occur in that market maker transaction level within the Dow 30 stocks. There are 30 stocks in the Dow. You've got to pick out the ones in the Dow. The leadership only in price movement will be the top two intraday high low to range, bull range, bear range, intraday high low, to qualify those two stocks, because those two stocks, that when they make those reversals, then you go down in the Dow. And it's the first calendar year movement. This is what it looks like in the MMT application. So that's a major support level. I will tell everyone that down here at 15,012 is going to be a significant support level MMTs. So that means that we would have to break down the rest of this $58 move and another $58 move times 2 to get here, to get down, way down here. But to get here, you're going to have another half a delta down at 58.86 in the Dow negative to reach that support level. Okay, now bull runs, bull price scripts are totally different. When they do finally come down and get those support levels, some are going to be in the very short term calendar. Let's say in the month of June, you've got, out of 20 trading days, say you have 7 counter rally days that go higher on an intraday level but fell at price resistance and then reverse, and then they make lower lows to the lower support levels within the broader calendar, half-year calendar breakout within the Dow 30 stocks. Mathematically, it's all decided that way. It doesn't have an opinion, doesn't have a stat, doesn't have any of that. All it has is the actual prices, either ascending in value for bull scripts, and then bear scripts is where the shorts get on up here at these highs, because there's very little short interest in the Dow. In bear moves, short interest is in high. They have a high count. When we rallied from here on the Dow, let's say the 13.4 breakout to 2,000 points higher, well, that changed the difference between the year 2000 to the end of calendar 2012. There was a month we had a big breakout there back in November when we were putting the bottoms in. But this is where this new bull script is in play mathematically. And I want everyone to have a full comprehensive level of directional price movement within the Dow 30 stocks. And those Dow 30 stocks are publicly traded corporations. There's the leaders. So, moving forward, based on this calendar yearly high reversal where the script is changing is that in bear markets they come down and hit support, but they blow right through them. Bull support levels will have shorter macro time frames of support and directional price movement and counter rallies. But so far, this particular half yearly rally here, and they put the highs in May. So yes, you could benchmark your high on 522, pal, at 1587. They got through the 3 calendar weeks of May, where normally May 1 through that period, you get a lot of selling in the Dow. But you didn't this year. Why? Because the algorithmic buy and sell scripts that are programmed with supercomputers to buy those leadership Dow 30 stocks made it continue to break out and go to higher highs, MMTs. Once again, there is the daily. You're below the 10 and the 20 in the market maker application. We all know one thing, that Mario says another half a delta down will be 1497 in the S&P. That's another 58 handles. If we were to go down one full delta, 2 half deltas equal 1 full delta, it would be $276.81 to get down to 1 full delta in the month of June. That would be in that. So what we look for in our market maker application is a 5 delta reversal. Bear markets, if you got a 5 delta reversal in the last 12 years, you sold through them. And markets were in, extreme bear mode for all those. Yeah, you had counter rallies, but don't get me wrong, and you do in volatility. As an MMT market maker, deploying the capital that is put into your MMT accounts, is that you got to understand why you're going to be selling stocks at the upper end of resistance level, and you're going to pick out the 2 best stocks that have high-low range in the Dow 30. Dow 30, as we can all see clearly here on a standard chart, it's not your MMT platform. I'm just going to show you very quickly. Look at the double top in the Dow 30. It's 30 stocks. They have algorithmic buy programs in those top leadership 30 stocks. That's how the Dow got up here. And they can buy, mathematically, they can buy 20 of them out of the Dow 30. That's a bull rally. Doesn't matter how it got here, it's here. And we have a double top weekly reversal. This will be the public reading at 14,913, but that's on a public chart. I'm just letting you see that on a daily level. One of the things I'll be happy to let you see here is what it looks like on a 15-minute level during the intraday trading action. Every top sold off on a 15-minute level. This is a counter rally to reversal. Counter rally to reversal, but look at, you made a lot of lower lows in the Dow where you haven't done that in a shorter time period. And we're right in the calendar. It's split year. Easy money's been made here. Watch a 30-minute bar. Watch a 30-minute reversals. These are the counter rallies. He made the higher high, just like they did in the S&P, but you're making lower lows. Price reversals on a 30-minute level is when you're shorting Dow 30 stocks. When they find support, then the Dow 30 leadership stocks and price movement found support, and then they broke out from their support levels. But when those leadership Dow 30 stocks hit that upper resistance level, look what happened to the Dow. When they sold off, the Dow sold off, and it sold off to lower lows. So when we're making transactions as a market maker in the market maker division, in their monthly training, everything about directional price movement with live entry and exit, it's very important for you to understand directional price change in a half calendar a year. Not only that, is where you should be making what's going to pay you. Why is it that you want to know that these things aren't breaking out like they used to? Here's what a 60-minute looks like. See? Up here at 15,520. Look at that high reversal here at 15.4 and slightly below it. And you can see that from the all-time high to the all-time low on this 60-minute level, this is what was happening in 60-minute price time frames intraday. And that, listen, they got 3, now we're in June. because it's a bull run, certain stocks will hit support. You can see how the reversal volatility from a major sell-off high to another sell-off, it got support. Then they pop it right back up there, and look at that failure. And look at the opening Dow bar here on this day. Right here. That's important for you to know. The time was 11:30. The value was 15.354 at that time. Look at the 60-minute reversal of this half bar of this counter rally, meaning that directional price movement increases both ways. In the bull cycle of the first calendar year, it was always to the upside. You'd pull back a little bit, but you'd break higher highs and or consolidate. And price movement, it really didn't matter. MMT, the most important thing for you to know is that when you're in the program and you're making those live entries and those live exits, dollars right then and there in directional price movement, you need to know why you're going to make a lot of money at two of these Dow 30 stocks up at the upper end of the resistance levels. And when they fail, you're going to ping it short and you're going to buy puts on those stocks. And we'll pick out two of them. That's the assignment, MMT. So I pretty much showed everything on a macro level on a 5-minute chart. You can clearly see that number that I talked about, it rallied right on up here to where that reversal has started. This is a 5-minute area, but look at, we were selling off. We came back up on a 5-minute level. You can clearly gauge it with the 5-minute reversal as to what the 15, the 30, and the 60-minute would look like at lower delta levels. This isn't our platform here. This is just a standard thing, but it applies to your broader Dow charts in your MMT platform. Here is a 3-minute chart of the Dow, your market maker platform. Look at it. It clearly defined. Here, I'll hit those bullets. Look at where on a 3-minute level here up here at 1538. Look at these teeny support levels, but look at how the reversals were on the 3-minute level, but we kept making lower lows. That meant that the mathematical turn was validated with these breakdown bars on a small level and then breaking their support levels and descending in mathematical value. Look at it, came up less than 2 teenies on the Dow. What is a teeny on the Dow? 7.36. That is a 1/16th value mathematically in our platform. So what I'm going to tell everyone is that, like I said, 1 delta down is 1430, a half delta is 1497, but you'll have good support at 1501. That's 103 handles lower. That would be negative 3/8 delta on a short time frame and 3-minute price action. That's what it looks like here, MMT. It's very clear, clean cut, and defined in directional price movements on the Dow. What we're expecting now is when we look at that longer time frame on the 30-minute level, is on Monday's trading, volatility can go back up to another high because it's a bull run, and it's not unheard of, MMT, to come back up here and test these moving averages. Go right through them, and then they would fail at whatever price they are. This is the closing print of Friday. Today's date 6/1/2013. This is the Dow mid-year report for MMTs. Every new MMT will watch this video before entering the MMT market maker program, making live intraday actions on the buy sides and the sell sides with trading capital provided, because it takes money to make money. And what stocks in the Dow 30, 2 of them would make the lower lows. So find me 2 with the high-low range there. You're already going to find the ones in the S&P 500. Find 5 of those. So we're going to conclude the directional price movement on the close of that day. But once again, when we're looking at the MMT market maker application, this is where all our decisions are made and prices are true. And another delta down, that's going to be that support level. If we break it, and this is a daily, so here's that 1483 that Mario was talking about, but there would be a support above it. It would be 14,920 MMT. uh, it would be 14,920 new MMTs. That's if we come down and test it, instead of coming right down here to this next delta, that means that you would be coming down slightly right in here and hitting that support level. And that's the daily half bar that I measured it on. That daily half bar value is 14,920 on the Dow. Same thing on the S&P. Here, another thing I want to make clear is when we were in breakout mode, yes, we did pull back to support. We made the higher highs, but now we're in the middle of the calendar year. The easy money's been made. They've been selling into resistance. We're going to find out where the broader Dow 30 and other key indexes and equities all at the same time are going to hold their support levels. That the difference between a multi-year bear and bull is that this is a bull that has come back. It took 12 years. My analysis back in year 2000 in March when I was selling short up there was because of the ridiculous multiples on all of the key indexes that it could take up to 15 years to work those multiples off before you could get back into a whole new pricing component within indexes. This is where the bigger part of the people that were involved in markets in the last 20 years or 15 years or whatever the case may be, even 5 years, you were in a bear with mini bull rallies. They're called little mini bull rallies, and you rally up in bears. And you can rally up here at support too before you fell again. And price, MMT. This is a yearly Dow component update. One other thing that I'm going to be very specific about for the new people that want to be involved in our programs, I'm going to make it simple. Just look at this. It says open an account page. Read it. See what you get. Get started now. This is a perfect time and place where the markets have totally changed. So for the old people that used to be in a market that got burned out, we have trading capital. We can try to meet your budget and you can get involved. Now would be the time. Even if your confidence was shattered through those years and whatever happened at that time during those certain bull year rallies, this is a new one. It's not the same. So we're going to give you buying power here to make the transactions, and we have programs. That's all I'm going to tell you. Take the time to read it. Okay? I don't have to say any more than that. That's how you get to it. All right? That's how you get to everything we have, including this. Today you'll have the S&P up here again, and I had, we already have the S&P up here. Man, look at that. See, so 6-1 mid-year, this is going to be the benchmark of where we're at in the 1 delta reversal, 1/2 delta. So there's 1 delta and a half on here. So Dow 30 stocks is picking the best two. Where is the other part of the market going to go? What would be the difference between old bear markets and new bull markets? How are the algorithms programmed and buy scripts and sell scripts electronically with supercomputers? Something you're not aware about. Go watch the Ghost Exchange. We're in the movie. And the people have taken their time to let you know the kind of algorithms that run things higher and or lower in the broader indexes electronically that were never here for you before to understand. Most people still don't understand. It's been going on for 10 years. It's just that we are in a very different time frame of the progression of it, but most importantly is the technology progression. Technology's changed. And you need to know, in the old days, it was a lot of the buy and sell tape was different. Here, it's done by a supercomputer. They can buy 20 of the Dow 30 stocks or 10 of them and just run the indexes higher. People lack that education. So, get with us. We will bring you up to date so that you can have a new approach and a new landing in markets. But not as a retail trader or a day trader. No, as a market maker. Price movement. Okay? We have other programs too outside of the market maker division that you can get involved in. Just send me a custom email. Whether you want to do something on a quarterly basis or you want to look at a yearly basis. You want to know all kinds of various different analysis. We're here for you for that. We're here for you, so you will need that. Our prices don't lie. So, MMTs, this is the mid-year update on the Dow Jones bull rally breakouts calendar year, getting through the first 3 weeks of May 2013. There's the support levels.